Good morning, y'all. I'm Catherine Ross with TheStreet on the floor of the NYSE with Jim Cramer. Jim, last night you tweeted something really interesting, which was that you wanted the stock market to be down more than it was.
Yeah, I mean, when you get this kind of action, where the futures are down big all night, they open down big, they stay down big, and then between 4 and 6, nothing really happens, 4 and 6 a.m., but the futures come back up. And then they gain steam from 6 to 7, even though there's some negative news, Apple about to come out, which was available. I guess we couldn't nail it down. And you end up with a situation where you pick off a lot of people as they come in. That's classic bear market behavior. That's what happens in a bear market. I think people are so used to thinking that there's the only bear market we've ever had was 2007 to 2009. We had one in 2011, almost down 19, but I got to make this point, which is when you open up and then you go down, it is very beleaguering, and every time it happens, you lose more people, and that's what's going on, and I feel terrible for people who are trying to trade. They're losing money. I have been saying that individual investors have to stay the course. We did a lot of selling higher for action alerts. We're trying to buy things down. Everything we buy goes down subsequently, particularly if you buy like even a BP, it yields 6. Nobody seems to care. They will care one day, but this market is down more than it should only because it opened up.
While you were on Squawk on the Street, news broke that Apple, which is real money stock of the day, cannot sell older iPhones anymore because of Qualcomm's.
Right, and yet they are selling older iPhones. I've got photographic evidence that they are. There's no reporting in the province that there's an injunction. The court did make its decision last week. Qualcomm chose to make its release at 9. We reported on it. There is a tremendous confusion in terms of what it really means. But Apple stock is getting killed again. Now, Apple stock, if they were to settle with Qualcomm, they'd come to some settlement, and you would think that Apple could go back up because it's selling about 12 times earnings, but maybe the 12 times earnings estimates. But at this point, maybe the estimates are in doubt because the court decision doesn't seem like it. Remember, all courts in China are controlled by the party, so any decision is directly related to the party. Obviously, we have the news about Huawei and the CFO, daughter of the founder. The Chinese are furious. They told the ambassador to come in for a little talking to. So it's entirely possible that this ruling, which came down last week, is some retaliation, or it just might be one of the many courts that Qualcomm and Apple are going at it, decided to go against Apple. But again, I have concrete evidence that they are selling this and that there's no ban. So you could say, well, listen, Cramer says no ban, go by Apple. What I am saying is that we have owned Apple for a long time. Apple's very inexpensive. I am well aware that the stock's going down. I'm not blind to it. We sold some higher, and we have no desire to sell more. Don't think that this could be much ado about nothing. But at the same time, should we have sold everything for the charitable trust? Well, I mean, that's not the way it works. We're trying to pick the best stocks and avoid the worst stocks. And Apple has been over time a great stock, and I think it will be a great stock because now you're getting at this price very little credit for the service revenue stream, which is a stream that grows as you have more iOS phones. So I want to say to people, I know it's going down. I do think there'll be a price where it's too cheap, but I have said it's cheap. So you could say, well, wait a second, he said it's cheap. I'm now saying this is the kind of event that theoretically could put a bottom in Apple if it's not a really impactful injunction. In our country, if you get an injunction like this, then the stores are shut and the product pulled.
Yeah.
That's not happening.
I also want to talk about Tesla because it's big news that Elon Musk said to 60 Minutes last night that he does not respect the SEC. What are your thoughts?
Catherine, unlike China, which has no rule of law that I can tell about in the Communist Party, we have an SEC, and we have a chairman of the SEC and a director of enforcement, and this man's in front of it. There is no lawyer in the world would ever say you should do this because it's an above the law kind of reference. In the same way that Musk basically just said the chairwoman can't do anything to stop him, and there are rules that are going to be followed. And if there was if Jay Clayton wanted to go after him, he could. But he's daring the chairman to go after him. And I don't know whether he's daring because he's got some sort of death wish, financial death wish, or whether he's daring because he just says, they're a bunch of jokers. Neither one is. I think both. It's ill-advised no matter what, and it hurts shareholders, especially because right now, it looks like that Tesla was going to be one of the winners with China trade, but he's not stoppable. He can't. They can't put a cork in him.
Yeah, he's got a mind of his own.
Yeah, and that's one of the reasons why it's so hard to own. Contrary set with Apple. Here's Apple 12 times, and we don't know whether there's a real injunction in China or not. There is some sort of injunction, we don't know. And then this stock sells at infinite. Apple plays by the rules. This guy plays by no rules. But it doesn't matter. Tesla's a cold stock. Apple is anything but a cold stock. I just like to contrast the two because you have to remember that in the end, cold stocks, unless they deliver earnings eventually, like Amazon did, they're overvalued. And it would not surprise me if we heard from the SEC on this. In the meantime, I want to emphasize again, the market is, if it had opened down, it'd probably be up right now. Instead, it opened up, so then it has to go down to where it was at 4 a.m., and then it's free to rally. What I feel badly about, again, bear market action, those who bought at the opening are hurt. They probably, many of them were the ones who sold. And I think if you buy good stocks, you'll do well. And if you buy a FANG stock, you know what you're getting into. And I like the FANG stocks down here. I like the healthcare stocks down here. We're buying a stock this morning, by the way, that you should, if you're not a member of the club, you should listen to our club call.
Well, that's quite the promotion.
Yes, it is.
Last week, we talked about Lyft's IPO, and you said something that really stuck with me, and that is that you don't think that Lyft has capital, that they have the cash,
desperate.
which is why,
it just seemed desperate.
But now we've got Uber.
Both of them, now I'm waiting for Airbnb. Uber and Lyft are the kinds of companies that will really hurt the stock market when they come public. They will take a lot of capital. There's not enough capital in the market right now to support those IPOs. I know that sounds ridiculous because you think that there's unlimited amount of capital. There isn't. And those companies are going to sop up a lot of FANG money. So FANG gets sold to buy those, and they're not welcome.
And what about Slack?
Slack's a good little company. It'll probably pop too much and people will get hurt. Because people are getting hurt left and right. And it doesn't matter what I say, they'll just keep getting hurt.
You want to explain to our viewers why you're wearing that hat?
Okay. I want to remind people that this is 2018, and even though the Eagles will not be in the playoffs unless there's so many things that did happen, we are the champ still. But congratulations to you.
Thank you.
The Cowboys in a tremendous, really fabulous work by Amari Cooper and Zeke, and it was just a really good game. I didn't like the officiating, obviously, but congratulations to you.
Thank you. I appreciate that, Jim. And yes, I did think it was a great game. All right, Jim, thank you so much for joining me. It's always great to get your insight. I'm Catherine Ross with TheStreet. We'll see you guys tomorrow.